You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of what's trading, a little bit of edumacation and some strategery. Throw it all in there with a dose, a splash, a cherry on the top, if you will, of some insight and hilarity. And you have the cauldron, the witch's brew, that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding Options Insider Radio Network. If you haven't checked out our latest, our lucky 13th edition to the network, Run, Don't Walk to, wherever you find this program, whether it's on the mothership, the website, via our mobile app, available for iOS, Android, and the Fire OS, or the myriad other locations that our content is available, iTunes, Stitcher, Aha Mobile, all those leading audio outlets. You can all find it there. And, of course, check it out for yourself. We delve into a lot of very interesting unusual activity. So if you like the Odd Block, it's a whole show pretty much all about that. So check it out. I think you're going to like it wherever you find your favorite Option Block program. And I'm joined on the old all-star panel today by the greasy meatball himself, Mr. Mark Sebastian, beaming in from scenic and sunny and just lovely suburban Chicago, as he is wont to do. Mr. Greasy Meatball, welcome back to the program, sir.
Hey, I'm actually in our world headquarters in downtown Chicago. So I am, believe it or not downtown, but, or not in the suburbs. I am in our home headquarters. So
I enjoy teasing you too much about your suburban locations.
You really do. But yeah, no, we're back where we belong.
Isn't that a very bad song, or perhaps a theme song to a very bad show, one or the other?
Yes, indeed.
All right, listeners, we will be joined a little bit later by good old Uncle Mike Tosaw. He has been delayed momentarily, but he'll be joining us forthwith. Meanwhile, it's time to keep on rolling with the show. It's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, this is a weird one. This is one of those shows that Alex likes to refer to as you start off the day, maybe you start doing the rundown for the show, the outline, a few hours early to get a little bit of a catch-up, a jump start on the day, and then a couple hours later when it's time for the show, the narrative has completely changed, and so that's exactly what we saw today. Towards the middle of the session today, we are recording, of course, Thursday, October 2nd. You're hearing this on Friday or any other day you choose to join us here on the old program. We're not picky. And of course, it was an interesting one. We were selling off pretty hard throughout most of the day, pushing well away from that magnet 2000 level that we seemed glued to in the S&P for so long, getting down into the 1930 range. S&P was down almost 0.75 of a percentage point, so it was really moving. VIX Cash was ticking up. We were seeing high teen into the 17 handle, listeners. It was just sell-off palooza, and sure enough, by the end of the day, all of that pretty much scratched. Every major index pretty much closing unched, maybe even slightly up on the day. So all of that momentum just reversed and pushed back completely the other way. Like I said, all the major indices closing essentially unched. VIX Cash closing off actually a little bit on the day, down about $0.50 or so. So really just a crazy session. A lot of intraday vol. I haven't seen that in a while. Usually when we see it moving hard in one direction and kind of staying that way. We haven't seen the old retreat game in a while. Mr. Sebastian, Mr. Greasy Meatball, a lot to parse, a lot to mine today. What caught your eye in today's activity?
You know, what's been really interesting is we've had 2 days in a row with we got the market flat today, all right? But there was a period of time where the market was down about, 5 handles. And so over a 2-day period, the market was down over 30 points. And the VIX was actually down over that period. We've actually seen, yesterday we saw the VIX up 0.4% with the market down 26. Today we see the VIX down 0.5 point with the market essentially flat. It basically kind of tells me that people are looking at their hedges and kind of taking them off. Kind of looks like that, if that makes sense. So, that's what I'm seeing as I watch the market, is that the VIX is absolutely not responding to any of this at all.
You're right. It has been kind of a weird period for the vol in relation to what we're seeing in the underlying. Speaking of weird periods, it's that time in the show, listeners, because we are joined now, better late than never, by good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the program. Better late than never. And what in today's sea of activity caught your eye, sir?
Well, just the general V-bottom of the market in general. I think that if you look at it around 10:45 Chicago time today, we're at our lows, and then it just bounced right back up and really didn't look back since then. I think that with everything going on and with tomorrow being non-farm, I think it's going to be an interesting day tomorrow. Well, that's for sure. And the fact that we're closed pretty much unchanged at the end of the day, like I said, I'll definitely be tuned in with great interest at 7:30 tomorrow morning. That's for sure.
Interesting to see if the rest of the market does as well. If we see a bit of a pop, I'll have to dig into the numbers today to see if VXST got some love or some of the more nearer term products. People recently have really been reluctant to hedge against non-farm. It's kind of been a non-event, to use the obvious pun. And yet maybe this week, given everything else we've seen, maybe that'll finally change. Have you seen any uptick today, Mark, in any of those products that might indicate a bit of interest in non-farms, or is still going to be a big resounding shrug?
I mean, huge resounding shrug. Just massive. That's what I'm saying. I mean, so today, if you want to, VXST was down 80 cents and is trading below VIX now, or 0.8% if you want to be technical. And so the VIX futures got destroyed, the VIX got destroyed, VXST got destroyed, VVIX is in. Anything that had the word volatility index was palms out today.
It did do some actual paper today, though, for the first time in a while, doing about 1,200 contracts today, which is fairly robust for a name that on some days we check it and it does 40 contracts. So doing some volume today, ADV only about 900, so well over the ADV even, including looks like a 1,000 lot of the OC 23s going up, expiring the week of the 15th there. 1,000 lot for 30 cents. Looks like that was a buy, perhaps. So interesting. That's the lion's share of the paper. It seems like one big trade. But a few others going up. The pretty much all upside calls for the most part. But interesting to see. Yeah, you'd think maybe with today's activity and also the big number tomorrow, you'd see a little bit more. But perhaps not. We'll play the wait and see game tomorrow and see how this all plays out. Speaking of how things play out, it is that time of year, listeners, that time of month, I should say, where all the big numbers are coming in. So we like to run those down here really quick as well. Talking about options numbers, of course, and we're looking at the numbers today. OCC, of course, the Options Clearing Corp, announced that total cleared volume, that's, of course, their business, in September last month was 371,000, that would be pretty small, 371 million contracts, and a little bit of change, about 15% up from September of 2013. The ADV that they cleared for the month was about 17.6 million contracts, also substantially up about 10% from September of last year. Year to date, they're looking at overall volume up about 2% for the first 3 quarters, with about 3.2 or so billion contracts actually cleared year to date. And overall, the exchange listed stuff, 365 million contracts in September. That was up 16%. And year to date for the options is about 16.6, also up about 2% from last year. And year to date total also up about 2% to 3.12 million options volume cleared over there at OCC. So a bit of a resurgence to what we saw last month in good old volume. Speaking of volume, it's that time of year as well, listeners. We've done this before on the show. It's been kind of fun, so I might revisit it here really quickly at the top of the show, the old trading block, talking about the global futures and options volume guessing game. This is, of course, compiled all this data from our friends over there at the Futures Industry Association, FIA. They track 75 exchanges around the world, all the volume coming in and going out of those. So we get some interesting insights into what's leading the charge. I'll let you guys, maybe Mike, will start with you. I'll let you have the first guess. What would be your guess for global? This is now futures and options combined. So a contract is a contract is a contract. From the first 6 months of this year, Jan through June, global derivatives volume. Where do you guess?
Oh gosh, I wouldn't even know where to start on that one. 2 billion. I have no idea.
Mark, I'll give you a clue. A little bit higher, a little bit north of that.
I'm going to say 12 billion.
Not close. You're splitting the difference. If this was Price is Right, Mike would win, even though Mark would be closer. It was actually just a hair shy of 10 billion. 10 billion contracts total, 10.1 billion, down about 13% on the year. The leading category there, of course, being the individual equity options and futures, the lion's share being options, of course, doing about 3.2 or so billion contracts, down about 6.5% from last year. Overall volume, that 10 billion number I mentioned, that's down nearly 13% from the same period in 2013. So overall volume globally taken a bit of a hit this year. The number 2 category being equity index options and futures, that accounting for about 2.5 billion contracts. That's also down about 7.6% from last year. I'll let you guys go out on a limb. Mike, I'll let you redeem yourself here. What would you say is the world's leading derivatives marketplace? Perhaps they might even use this in their marketing.
CME Group.
Yes, there we go. So now we got to fill out the rest of the top 5. I guess you guys would get a couple of these, but we'll see. Mark, what's your guess for number 2?
GoPro.
Shows where your head is, sir. I'm talking exchange volume, sir.
I'm gonna say number 2 is the Philex.
Really? That's
Yep.
It's very aggressive of you. They're actually number 8 they're part of NASDAQ, obviously, so they'd be included in that NASDAQ group. Number 1, CME with 1.6 billion contracts. Number 2, one more guess, Uncle Mike. Number 2.
ICE.
Yeah, ICE. There you go. ICE. I thought that was a layup. That's about 1.2, 1.15 billion contracts for ICE. They're down about 21% from the same period last year. CME only down about 2%. Number 3, our friends overseas. See if you can guess them.
I'm gonna say Eurex.
Yeah, there you go. I was going to give you a hint, but you didn't need it. Eurex, number 3, about 1 billion contracts. And then number 4 and 5, the NSE, the National Stock Exchange of India, 776 million contracts. They, of course, do some small notional value contracts over there, so that tends to account for some of that. Number 5, BMS Bovespa. Our friends over there at the CBOE not coming in till the number 6 spot with 647 million contracts, up nearly 12%. No surprise there. Vol products and index products, one of the few shining stars in the world of options and derivatives. So they are up about 11, nearly 12% from this period last year. Mark's favorite there, PhilX, part of NASDAQ, of course, number 8 with about 500 million contracts. And then it goes down the list from there into Korea and others. One Chicago, number 39, nearly 5 million contracts. Not bad for them. I never would have guessed they were that far up. We'll do a couple more because these are kind of silly and they get into some of the more esoteric products in the world, shall we say. Uncle Mike, back to you, sir. What is your guess for the number 1 agricultural future and options contract worldwide?
Corn.
That's number 4. Corn futures on the CBOT doing about 64 million contracts. Actually, no, I'm sorry, that was last year. This year doing about 42 million, so down about 40%. For 35% actually for corn. So not a good year for corn. Mark, try again. Go farther afield, sir.
Farther afield, I get it. Soybean.
Not bad. I'll give you actually number 2 and number 6 because soy meal is number 2 with 95 million contracts, down 64%. Wow, these things are getting crushed. And soy oil futures are down about 65%. There's a few soybeans. That's probably what you really meant, are down number 12. They're at about 13 million contracts and change. So I'll give you one more guess, Uncle Mike. Think exotic.
Exotic. Okay, I was going to guess wheat, but I have to think exotic.
Not exotic enough. Wheat number 9, sir.
I'll go with rough rice.
Not a bad one. I don't see that on the list, so that'll be a swing and a miss. That'll be your whammy, sir.
I guess that's too exotic.
Mark, one more guess for you. This name might be right up your alley, sir.
Coffee.
No. Not a bad guess. I don't see coffee on here, but the number 1 ag futures and options contract. Sugar, not a bad guess. Number 5.
Cocoa.
Number 5, not exotic enough, fellows. The number 1, it's hard to say with a straight face. The number 1 ag futures and options contract are indeed the rapeseed meal futures. Over there at the ZCE, they did 148 million contracts. I'll have to look and see. It says it's a 10-ton contract size, so it's got to be a fairly decent notional value. I don't know, but it's doing some serious paper.
That was my next guess.
All right, we'll do a couple more because these are kind of crazy. Let's do this. This is an easy one. What's the number 1 energy futures and options product worldwide? Mike, redeem yourself, sir.
Well, as much as I'd like to say bean oil, I'll just go with crude.
Yeah, the Brent crude over there at ICE they do about 73 million contracts this year, down about 10%. So the number 2 one's pretty easy there, Mark.
WTI.
Yeah, that's doing about 65 million contracts this year, down about 11.5%. And then it drops from there. Coke futures, Henry Hub, Nat Gas on the NYMEX, and down and down and down. I won't even bore you with the interest rates because everyone knows it's the euro dollars. Let's do an interesting one. Let's do equity index futures and options. The number 1 equity index future and option contract worldwide. Uncle Mike, go, sir.
I'll go with the mini S&P.
Not a bad guess. Number 4, totaling about 205 million contracts, down about 16.5% so far this year. Mr. Sebastian, once again, I encourage you, sir, think farther afield.
I'm thinking the Nifty.
Ah, yes, well done. The Nifty doing all 50 Indian rupees worth of notional value, doing 374 million contracts so far the first half of the year, down 13%, still lighting it up. Just crazy volume on that 50 rupee product. My God. It's got like 0 notional value, but it puts up a lot of paper. Hopefully you're a broker over there. You're getting paid per contract. You're doing pretty well. By obviously leading the charge, almost there at number 2, coming in close to the Nifty. 282 million contracts, down about 13%. Number 3, Mark. Far afield again, sir. See if you can do it.
All right. My thoughts are it's the stocks future. Euro stocks.
You mean like Euro stocks?
Yeah.
Not a bad guess. Number 5, actually, doing about 132 million contracts, down about 10%. Uncle Mike, if you guess this one, I will be amazed. The number 3, index futures and options contract. I know you sling this one quite a bit. It's huge in your neck of the woods. What's your pick, sir?
As much as I'd like to go with Apple, with the confusing clues with which I'm getting today, I'll go with GLD.
Think of the opposite of are we still doing equity indexes here? Think of the opposite of what I'm saying. I'm trying to throw you. I'm trying to throw you off, and clearly I have. I'll just give it to you. You won't get it. It's the Kospi 200 over there in Korea.
That was my next guess.
For 500,000 Korean won worth of notional value.
See, and I was about to say the Hang Seng.
Down about 27%, doing 218 million contracts. And then the E-mini number 4, of course, you already guessed that one, and the Euro stocks number 5 there for 10 euros. We'll do one more category really quickly because it's kind of fun. And Uncle Mike, this one's right up your alley. I'll see if you can guess the number 1, though. It might be a little bit surprising to you. We did this one last year, and it was very surprising to a lot of people. It is still the number 1 metal futures and options contract worldwide. Uncle Mike, I throw it to you to redeem yourself, sir. What is the number 1 metal futures and options contract worldwide, sir?
I'll go with silver then.
Not a bad guess. Number 2, of course, not the one you're thinking of. This is the one on the Shanghai Futures Exchange. The 15-kilogram one, doing 102 million contracts last year. Not the big CME. The CME, I'll have to find that one. That's down. That's way down on the list. Mr. Sebastian, what's your guess for the number 1?
All right, this is going to be a little. I'm thinking it's got to be industrial instead of precious. So
A good guess.
Yeah, my thought is, so I'm debating between aluminum and iron ore, or steel. And I'm going to go with aluminum.
Not a bad guess. The precious aluminium coming in at number 5 on the London Mercantile Exchange there, 25 tons of notional value, doing about 32, almost 33 million contracts last year. Pretty much unched. One of the few bright spots. You guessed iron ore, also not a bad guess. You're doing better on these esoteric commodity products than I would have given you credit for.
That's because you and I think the same way.
Yes, into esoteric products all the time.
You are my Danielson to my Mr. Miyagi.
Yes, I think that relationship may be a little bit reversed, but otherwise I think you're on the right path. Number 4, iron ore futures, 100 tons worth, so a big contract, doing 32 million contracts last. For some reason, no data in 2013. I'm not sure if they delisted it or changed it or what the deal was. Number 3, copper on the Shanghai Futures Exchange, 35 million contracts, up about 7%. Silver futures, the ones over there on the Shanghai Futures Exchange, lighten it up to the tune of 103 million contracts, up 500% from the year before. So clearly some changes in the works on that contract. And ring-a-ding, the number 1 global metal futures and options contract. You were thinking industrial. You were correct. Steel rebar futures on the Shanghai Futures.
Iron, I was debating between steel and iron, and
down significantly, down 34% this year. It's still doing 120 million contracts. It's a pretty sizable contract,
too,
about 10
tons. They're not letting China dump a bunch of steel on the market anymore.
Yes,
that's part of the problem.
so that kind of hurt a little bit. So that was the number 1 one last year. I remember a lot of debate over that one. It's still holding the number 1 spot this year. So let me tip my hat to our friends over there at FIA for compiling all of that great data for us. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it is time once again for the odd block, the portion of the show where we break down the weird, the wild, the just downright interesting paper we're seeing out here in the options world today. A lot of stuff interesting, as you might imagine, in a whipsaw type day like today, but it wouldn't be the odd block if we didn't hit some of our old favorites, our old stalwarts, starting off in the land of the semis and the micros again with RF Micro Devices, ticker symbol RFMD. We talked about this one before, but it's been a while since we revisited this name. Doing some fairly decent volume. This one does about 7,000 contracts a day, doing about 9,000 today. This one closing today, $11.03, so up about a dime or so on the day. Not a big underlying movement that caught our eye today. What caught our eye was some fairly sizable paper coming up here in the NOVE expiration cycle. In particular, it was the NOVE 12s that caught our eye. We profiled them this morning. on the old mothership, theoptionsinsider.com, going up when we profiled at 6,000 times in one mega block. We saw paper going up here in one block on the strike. Sizable stuff, 6,000 contracts to be precise. Going up, looks like a buy right here on the actual strike with 150,000 shares. The options, the calls going up straight up for 35 cents. They're 45 cents at 50 going out with the stock fairly unched on the day. So a lot of juice flowing into that strike after the trade. About 5,400 contracts open on this strike. This is one of the more sizable strikes, I should say, from an open interest perspective. So it is possible this guy could be adding more, could be closing out. If he's closing, he's doing clearly more. So looks like he's piling on. Mr. Sebastian, amidst all the activity today, what's your take here on this guy? You think he's piling on? Think he's closing out here in RF Micro Devices?
Well, it's always kind of tough to tell. He probably has some stock done with it. You know, typically though, when a stock is really getting hammered or is having a tough time of it and is down big, you know, you may see somebody step in and buy some calls on sort of a rebound play, and that's kind of my guess. You know, I don't know the exact time that he bought this, but you know, if he was buying it somewhere near the lows of the day, he's probably a happy camper. So it could have been a play along those type of lines. RF really did have a nice rebound along with the rest of the market today.
Yeah, it did. It pretty much closed unched, which is actually a fairly decent feat on a day like today. The rest of the market, of course, like we said earlier in the show, rallying pretty substantially to close unched on the day. Moving on to another name and another sector that has been fairly active of late. This is, of course, the energy sector in particular. This is the oil and gas, the SPDR, S&P Oil and Gas Exploration and Production ETF, ticker symbol. Of course, XOP closing today, $66.46, down about 40 cents or so on the day, so a little over 0.5%. And this is the name, as you might imagine, does decent paper, particularly from an odd block perspective. This one does about 30,000 contracts a day, and on a very active whipsaw-y type day like today, doing a lot of paper, doing about 180,000 or just about that today on the day, so almost 6x their ADV going up today in XOP. When you have that much paper, it's pretty much just on every strike across the board that you can think of, listeners. I'm looking at it out here now, and just about every strike had at least a few hundred going up, every reasonable strike, that is. What caught our eye in particular out here, though, looked like it appeared to be a roll, and it appeared to be that they're playing with a little bit of house money, which is always a fun way to trade. And this looks like, in particular, it was the ACH 63.65 put spread going up for 79 cents, 7,600 times total. Looks like a few more piled in towards the end of the day. Total of 13,000 contracts going up on the ACH 65 puts, about 9,000 going up on the ACH 63 puts. So he could have done a couple thousand more on the spread, or he could have legged into a ratio, probably the former more than the latter there. Like we said, it went up for 79 cents. It went up in two blocks. It looks like someone's coming in, closing out the 65 puts. As you might imagine, that's been a fairly decent trade for him, and rolling on down into the 63 puts. Usually this was a guy who's just hedging a big stock position. You think he might want to give himself a little bit more time to continue his protection, but he stayed in the same expiration month, which is interesting in and of itself. Obviously, this guy taking some house money, putting it to work on a lower strike, obviously thinking there's more to come here from a downside perspective in XOP. Looking at the chart here, the 1-year chart, and we're hitting right about the nadir here of the 52-week period. 64.5 is about down to as low as where they got. So we're trading above that, but not much. So it hit that low today and then rebounded. This guy clearly saying, hey, there's more downside to come out here in XOP. Mr. Sebastian, what's your take on this guy rolling down but not out here in XOP?
You know what? When a smart customer takes money off the table and then stays with it, or sometimes you'll see these guys throw more at it. I am always I always think that's kind of smart paper, And, let's just put it this way. I would not be excited about selling this guy a bunch of puts.
And you're not coming in saying, sold to you, sir.
This is not a sold to you situation for me.
This is a stand back, hands in your pockets, and wait and see. Maybe you follow him a little bit. Who knows? Maybe you're a fan.
Maybe.
Maybe that's you. Let's just admit it, sir. This is you.
How did you know?
Well, the size was a little
Yes.
small, but other than that, it has all the hallmarks
Indeed.
of a Sebastian. Why roll out when you can just roll down? All right, moving on to our final name, our final victim here. In the old odd block, this is Toll Brothers. It's been a while since we talked about these folks as well. Ticker symbol Toll, T-O-L. Closing today, $31 and some change, pretty much unched on the day. This is another one that had not as much of a range as the market, but had a little bit of a dip throughout the day. It's a name that does about 5,000 contracts, one contract shy of 5,000 contracts a day, doing about 27,000 today. So serious paper going up today in Toll as well. And what caught our eye today was looks like a buy rider active in a couple of months actually. We started off looking at the OCK 34s, just a straight up OCK, no weeklies here, going up. When we profiled them this morning, 10,776 times as the day progressed. Looks like no more paper went in. That's all that went up on that strike today. 11,487 open on that strike. So looks like he's probably closing out there on the OCK 34 level. And then 5,500 of the Nove 31s going up as well. He did those. He did the whole spread for $1.05, obviously 1x2 listeners. And then that's 1x2. It seemed like at first when we first started profiling. As the day went on, he did a total of about 10,400 on the Nove 31 strike as well. So clearly he's maintaining the same size position, just taking off the OCK 34s and getting a little bit more aggressive with it, rolling on down to the Nove 31s. Getting not a bad level here for these calls. It's a little bit more aggressive trade, though. These are essentially at-the-money calls now. I don't know where he wrote those OCK 34s, where Toll was trading, but I'm guessing they were probably a little bit more out of the money on these. This guy clearly did well on the first kind, and he's saying, I want more, and I want them right at the money here in good old Toll Brothers. Mr. Sebastian, take us home. What's your take on this guy flying a little close to the sun here in Toll Brothers?
This is an odd thing. Just because somebody trades size doesn't mean they're doing something smart. That's kind of my thought process.
Pretty much the mantra of our entire network, sir.
Yeah, exactly. So this would probably not be one I'd be about piggybacking on.
I mean, he's not getting a bad return for essentially 1 month worth of time here, but he is playing with a little bit of fire here. We don't typically see the size as institutional guys writing that aggressively. Usually they give themselves a little bit of room to run because, after all, they do want the underlying to play off a little bit for them. Looking at the 1 year here on Toll Brothers, it's a fairly aggressive level in the underlying as well. This is essentially another one that's right at the bottom or near it here of its 52-week chart. It got as high as 40 back in the first quarter of this year, and it flirted with 38 not too long ago. So this guy clearly drawn a very aggressive line in the sand here for the near term in Toll Brothers. All right, that's going to do it for the odd block today, listeners. And now we're going to keep on rolling because it's Thursday. It's time for you guys to join us on the old show and time to dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. This is indeed the portion of the show where you guys get to join us on the old program, make your questions and comments known to us. No shortage of ways for you guys to do just that, including surfing on over to the mothership, theoptionsinsider.com. Leave us a comment, leave us a question through the feedback form. No shortage of ways for you guys to do it just right there. Of course, you can find us on social media, twitter.com/options, facebook.com/theoptionsinsider. We get a lot of people looking at our Facebook. For whatever reason, few people actually use it as a question vehicle. I'm not sure why it is. They seem to prefer Twitter en masse. I don't know why that is, but whichever way you prefer, you can reach us there. And, of course, via email, questions@theoptionsinsider.com. Or we've baked it all into the app for you. It makes it really easy. Just open up the app, hit that comment tab, and you can send us whatever you like via pretty much whatever method you prefer. All right, and the first person taking us up on the charge this week, listener DCruz. He writes, "Hello, All-Stars." Well, hello, Mr. or Mrs. DCruz. He or she goes on to write, "You said on the show last week that you guys never exercise your long options except for a few very rare occasions. I'd imagine that's the same for most options traders. That makes me wonder whether they should just make all options European. Doesn't that more accurately reflect the reality of the market? And can you ask Tosaw if he can share his tale of pain with Cisco? It might be a good learning experience for the rest of us. Thanks, DCruz." Well, I don't know, Uncle Mike. I can't speak for you. Are you open to sharing your tale of woe on Tosaw, or is that just too much? Or on Tosaw, on Cisco, or is that too much pain for you, sir?
I can do it, but I'll be honest with you, I don't really remember it all. I put that stuff out of my mind. But from what I remember of it, it was just a loss. I got out of it. It was like a 7% loss in the stock. I think I was doing some covered calls on it about 3 or 4 years ago. And if you mess up on this show, you never get to hear the end of it. Just ask the greasy meatball sandwich.
Yeah, no kidding.
Yes, he did kind of label himself with that one, didn't he? For life now, of course.
And what's ironic is, folks, Mark took us out to one of the best steak dinners I've ever had in my life. Thank you, by the way, Mark. And he is far from a greasy meatball person at all.
Well, just give me a chance, Coach. Just give me a chance.
No,
I'm kidding. Yeah, no, that was a good time. Actually, that was actually really fun. It was. We hadn't done something like that in a long time. Although Mark Longo's now he's on a steak and lobster streak, from what I hear.
What can I say? People keep throwing delectable meals at me. I feel bad saying no. I will say, though, listeners, if you want a steak to taste extra delicious, just have Mark Sebastian pay for it. It all of a sudden becomes the most delicious piece of food you've ever had in your life. But we digress, sir. Mark, he raises an interesting theoretical thought question, if nothing else. Should we go out there and just make pretty much all the options European since no one exercises them anyway?
No.
How did I know you would say that?
No, there's very good reasons to do that. You're right. Nobody exercises calls. People exercise puts all the time, and people exercise calls ahead of dividends. So there are some very good reasons to have exercise there. The reason why European options are, they have a really strong purpose. But if you want something that actually, if you made equity options European, you might actually see them at least some sort of break in correlation relative to how they move now with regards to delta. So you'd have to change a lot of things, and I think it's a terrible idea. No.
That's why I lined you up there with some red meat. I had an idea this one might stir you up a little bit, but you're right. It would be a big change. I don't think people who just think about that don't think about all the ramifications that would go into it, and it would be very much a change on a lot of the levels that Mark just talked about, as well as all you guys out there who like to get a little bit extra juice for your options. All you degenerate sellers out there, I know there's a few of you out there. You may not like the change to European either. Take some of that away from you. Uncle Mike, what's your take here on this grand tectonic shift to make all things European?
I'd be happy if it happened personally. I can see Mark's point as to where he's coming from, but from the style with which I trade, I would be overjoyed if we did something like that.
So you could sleep at night?
I could sleep very well at night with the Sebastian steak in my belly.
Still there a couple weeks later, huh? Maybe you got a bad piece of beef. I don't know. You should see a doctor about that, sir. But an interesting question, Mr. D. All of our listeners, they come in with these great little thought questions and thought topics to debate. What was it, Kaiser Dog last week about whether you should ever even exercise options to begin with. Kind of got this whole ball rolling. Interesting stuff here, and I guess that's all you're going to get, Mr. Cruz, out of the Cisco thing. So no great tale of woe there after all. Just something to tease Uncle Mike on next time you see him. All right, next up, we got a question from looks like somebody who wants their name not to be known amongst the masses. but they write in, on several of your programs, you mentioned that it is important to understand the VIX cash level at a given SPX level. Can you please explain this further? As an example, what are the implications of a 12 VIX at an 1800 S&P versus a 9 VIX at an 1800? Likewise, how does a 15 VIX at 1800 compare? This is a good question there, Mr. or Mrs. Anonymous. This is a frequent topic of discussion here on this program, as well as, of course, our Volatility Views program, where we go into a lot more detail on stuff like this. But this is the topic that I frequently refer to as the context of volatility. And while it drives me crazy that I see so many mainstream outlets just throwing out VIX cash with really no other context given to it, because you're right, as you point out here, it means different things at different levels. In your example here, you gave, what did you say? You said a 12 VIX at 1800 versus the 9 VIX at 1800. One represents a whole hell of a lot more volatility than the other. Remember, we've talked about vol skew here on this show in the past. As you rally, typically in investment skew, that vol should come off. So if the vol doesn't, if it indeed just stays the same, that's inflated levels of vol as you rally up the strike chain. When it increases, that's substantial. That's something you need to pay attention to. That shows you that something crazy is afoot to causing those levels of vol to be inflated, something you should be paying attention to if you're trading that product, and something that you will never hear if you just hear someone banding about VIX cash numbers all day without any real context to them. Mark, I know this is a big, sore, sticking point for you as well. What do you have to say to our friend here, Mr. or Mrs. Anonymous?
Well, I mean, everything needs to be taken into context. You can't just throw it out. There's been the way VIX cash just gets bandied about by a bunch of people that don't know what they're talking about and misrepresented. I mean, I was on the train this morning and someone's like, oh, that's the fear index. And I'm like, no, it's not. All right? If you're going to quote it, have a real understanding of it. Now, that be fair, most people on the news don't even understand how the S&P 5, what cap weighted means. So I don't know how we expect them to understand VIX.
Are you picking fights about VIX on the train in the morning? Is that what you are you that guy?
We were just talking about the VIX this morning for some odd reason.
You're like, hello, random stranger next to me on the train. What is your opinion of the current level of implied volatility in the S&P 500?
Exactly.
Are you that guy at 6:30 in the morning that I want to just punch?
No, you're not.
All right, Uncle Mike, save us here. What's your take here for Mr. or Mrs. Anonymous?
I think for Mr. Anonymous, not only do you need to look at the VIX, I think you need to look at the individual options in a lot of times as well. I look at the VIX from time to time, but if I'm trading something within SPY, Apple, or if I'm going through an individual stock, I think that's something that needs to be looked at as well. Beyond just the VIX, the VIX futures, the VIX cash, and that type of thing. So I think it's step one of a much bigger picture.
Yeah, the SIBO puts out a VIX index for about everything in the world. It's worth following just about all of those. But again, make sure you really understand what you're looking at and understand that you can't look at them in a vacuum. All right? Trends maybe, but you can't look at them in a vacuum on their own like a single day. It provides zero information.
And if Alex were here, he'd be sure to mention, like what Mark just said, all the Idea Hub stuff that you guys always use over there at OX that Alex is always talking about. All of those trades are essentially generated from the VIX levels that the SIBO puts out for those individual names. They pull that VIX and they use it as a driver for their recommendations for premium harvesting, et cetera, et cetera. So if you're using any of those Idea Hub products, you're using those VIX numbers now, even if you don't realize. And they are interesting, even though they could be a lot more interesting if they made, let's say, a single name tradable Apple VIX or something along those lines, like I've tried to urge the SIBO many times in the past, apparently to deaf ears on this one. Great question there, Mr. or Mrs. Anonymous. We have a couple more here, but these are pretty substantial, and we're running a little bit low on time, so I don't want to do them a disservice. So we'll save you guys here, Tom and Alan, for another one. Of course, if you guys have questions, we'd love to hear from you. Send them in. Long, short, we don't mind. If they're longer, we may have to truncate them a little bit, but if they're short, we can certainly get to them as well. But we love them all. Meanwhile, we're going to keep on rolling right into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, like the man said, this is the portion of the show where we tell you what we're keeping an eye on for the rest of this week into the old weekend. We already touched on the big driver at the top of the show there, non-farms coming out tomorrow. They've been a bit of a shrug of late so far, all the various products showing that they're going to be a bit of a shrug tomorrow as well, or at the very least that no one really seems to be paying much attention to them in terms of, hey, we got to hedge this, hey, we got to trade this. I said there was some action in VXST. It seemed like just like some unwinding of some upside calls for the most part, and that was about it. So we'll see tomorrow. Maybe non-farms, this will be the time that it proves everyone wrong. But so far, at least, non-farms has been pretty much a resounding meh, as I'd like to say here on this program. Uncle Mike, I'll toss it to you first. What are you watching? What's catching your eye for the rest of this week into the old weekend?
Just to reiterate what you had said is the possible resounding meh tomorrow. I still want to keep an eye on Hong Kong. I think that's definitely something that could have an impact on the markets in one way, shape, or form. And a lot of times bad things seem to happen over the weekend. So make sure you're going into the weekend with the risk with which you need.
Wise words as always, sir. And Mr. Greasy Meatball, what's catching your eye for the rest of this week into the weekend?
Yeah, I mean, I agree with them. I think, the Ebola thing is probably, here's two major tips for all investors, okay? One, don't sell the stock market because of some sort of disease. Recall what happened with SARS. Two, if someone's recently been to Liberia in, let's say, the last 2 months, don't make out with them, all right? And on top of that, there actually is some risk in Hong Kong. I really agree with Mike. If that goes south and, over the weekend somebody decides to do something, China decides to do something really violent and the Hang Seng is down 5% on Monday, we could have a disgustingly ugly Monday open. Aside from that I don't see a lot of other risk there. I tend to agree with Mike. I think we're looking at a resounding meh tomorrow with the possibility of, more than likely a rally on the news than a sell-off. That's kind of my guess.
Yeah, if you're selling this market based on Ebola, you've been watching way too much 24-hour news. You need to get the hell out of your house for a little while and away from the trading screens, because one guy from Liberia getting it in, I believe, Texas, it does not spark a panicked sell-off. That's terrifying in and of itself. But you're right, there will be stuff to watch out of Hong Kong, and we'll see. Maybe I keep waiting for non-farms to do something and for it to mean something again. There was a time when non-farms ruled all things, and people were afraid to sell premium going into the weekend because non-farms was coming, and God forbid they actually would buy hedges against non-farms, and we haven't seen that to any great degree in a long time. So it looks like, at least right now, that's pretty much what we're going to see again tomorrow. Not a heck of a lot going on in any way, shape, or form. We'll see. Maybe we'll be wrong, listeners. You'll be hearing this after the non-farms have come out, so maybe you can laugh at us in retrospect and say, haha, those guys, what fools they were. S&P off 2%, but I probably don't. I probably doubt it. So that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. But before we go, as always, let's check in with each of my cohorts here on the old All-Star panel, see what's cooking with them, what may interest you. Starting off with you, the Uncle Mike himself. What's cooking in the land of RCM Wealth Advisors?
Well, this will probably be the last time I make this announcement for another couple of weeks anyway. If you're interested in working with doing some retirement planning with an option kind of guy, feel free to give me a call at 312-212-3531 or send me an email at mtosaw@rcmam.com.
There you go, listeners. The offer is filling up. A lot of your fellow listeners are taking them up on it, and they're going to take your spot. So give Mike a call, give him an email. If you got $500, you can trade with Uncle Mike. Have someone do stuff for you. That way you don't have to do it. Let him roll your puts for you. Let him leg into all of his funky near-term weekly put spreads for you and all that fun stuff that he does to pay for your protection. Because quite frankly, that's a pain. You don't have much of a BBI if you're doing that all day. So let Mike do it for you. And then he can sleep at night. Let him stay up. That's the whole reason, right, Mike?
Save your kidneys.
Yeah, exactly.
Save your kidneys.
There you go. We just came up with a brand new marketing slogan for you. I'll expect my check in the mail, sir.
Well, wait, didn't I come up with it? We're recorded here.
Well, I inspired it, let's just say. So I'll get my inspiration fee after the.
All right, I'll give you an inspiration fee.
All right. Speaking of inspiration, you don't usually turn to this guy, but he's all we got. So, Mark, what's coming up in the land of the pit?
On Saturday we have our VIX primer. It's going to be a little over 2.5 hours. Andrew's going to dig into how the VIX ETNs work and some strategies for trading them. I'm going to spend some time on VIX and VIX options. and some strategies for trading those. It's if you are interested in learning how to trade the VIX or understanding the VIX, this is a can't miss. And normally we charge between $300 and $150 for this. We're doing it for $47, which is ridiculously cheap. Go to optionpit.com/events to check it out.
There you go, listeners. So you're a little bit of cash burning a hole in your pocket. Spend about 50 of it with Mark and have him and Andrew walk you through some VIX. And if you got another $500 lying around, call Uncle Mike and he'll put it to work for you. There you go. A good 1x2 combo. You can't go wrong with either of those. And of course, the Viceroy couldn't join us today, but he is recuperating and doing well, I'm happy to say. And in his absence, allow me to mention all the cool stuff that's cooking over there at optionsexpress.com. You can surf on over and find all of the cool live events he's always talking about, as well as all that cool Idea Hub stuff right over there at optionsexpress.com. The educational stuff you can get without even being a client. You can just click on the education tab, pre-login, which is awesome. I wish all brokers would do that. Make that education freely and widely available as far as you want, and they do that over there at OX, which I love to see that. If you want to check out the cool Idea Hub and the trading patterns and all the other cool tools we're always talking about here on the show, the walk limit and everything else, you got to be a client, of course. So you may have to log in, check it out. Maybe try the paper trading, see if you like it first, and play around with the tools and see if they're for you. All of that available over there at optionsexpress.com. Check it out. I think you're going to like it. And on behalf of the Viceroy, who is missing, and Uncle Mike, and the Greasy Meatball, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program, and for sending in such great questions. Keep them coming. We love all of them, the long ones, the short ones, the crazy ones, all of them. We love them all. We read them all, even if we don't answer them all on the air. Don't worry. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.